everybody, this is your host, 𝙁𝙁𝙀𝙀 with the Freedom Report, and this is your weekly market wrap-up for July 16th, 2024. And what a difference a week makes. We had a lot of stuff happen this weekend, which we're going to get into. You guys know what I'm talking about. In the news story section, first I wanted to, as per usual, dive into the economic calendar and give you a readout of what's going on. Not too much has changed since last week. You had the goofiness of the producer price indexes and the CPI is not matching up. The producer price index, which is the wholesale costing, went up, but the CPI, the retail costing, went down. There's something wrong with the CPI. I've said for years I don't believe it's the real number. Now you can go to shadowstats.com and look up what I think is the real number, or what is probably the closest approximation to the real number done by John Williams of Shadow Stats. But when you have producer price index going up for many months and you have any dip in the CPI, you have to question how are producers eating those costs and not passing them on to consumers. To me, it strikes me that perhaps the government is thinking about the Fed and their actions heading up to the election, and that maybe they want a rate cut, and so they're going to cool off the CPI a little bit to do that. I know that sounds like a conspiracy theory, but I've never trusted the government numbers. I'm going to break down from my book that I wrote in 2009. Chapter 2 has a breakdown of how these numbers have changed over time. I'm going to bring that back out in a video and explain to you why CPI is not an adequate indicator of inflation. We'll get into that later. Other economic data, Empire State Manufacturing Survey, that's New York area. Manufacturing index is down 6.6. It was down 6 last time, so manufacturing continues to crater. Even the national manufacturing number is not great. While manufacturing is not the biggest part of our economy, it's still important. It's still an indication that there is less demand. And that's something that we need to keep an eye on, because if there's less demand, it means we're in some sort of deflation. Now, whether it's products we export abroad or products we're using ourselves, there is deflation. There's less demand. And given where the dollar is, it hasn't strengthened to the point that you would expect exports to weaken considerably. According to these manufacturing numbers, I think it obviously has more to do with what's going on with our own economy, in addition to maybe some deflation around the world, and less to do with the actual dollar in this case, because the dollar hasn't moved that much during the time at which manufacturing has been falling off. I think it's obviously a supply-demand thing and not just the value of the dollar thing. U.S. retail sales were flatlined. We did see U.S. credit usage go up 11 billion, which I think I talked about last time. Sales are not up. Credit usage is up 11 billion, which means inflation's a large part of that. And people also are buying things that the things they normally, what that tells you is people aren't buying more stuff. It's flatlined in terms of sales. And if credit card usage is up, it means that people are putting things on their credit card they normally don't, essentially. So people are putting things like their electric bill, their car payment, or whatever they can get on their credit card without actually increasing consumption. That's a sign the consumer is not super healthy. The rest of the data is not too terribly important, but just know that overall, the economy is sort of flatlining in a way. Some things are retracting. Manufacturing doesn't look good. Consumer credit usage doesn't look good. Retail sales are not looking positive and haven't for a while. Inflation is probably a lot more sticky than the government numbers indicate. So we're in a stagflationary era, which is probably eventually going to lead to some sort of deflationary collapse. I think that's been my story for the last 10 to 15 years. Looking at the markets, at the time of reporting this, around noon Central Time, the Dow is at 41,099. It's up almost 600 points today. The S&P is up 11 points to 56.94. Nasdaq's actually down 98 points to 24.85. Oil is down 80 cents to 81.11. The 10-year Treasury is down. In fact, let's go over to the bond market. We still have yield curve inversion between the 2 and the 10-year. You guys know what that means. It's a recession indicator. The 10-year is falling to 4.188 today, and the 2-year is up to 4.466. So that yield curve widened a little bit, where the 2 got more expensive, the 10 got less expensive. If you're looking at a bond in the secondary market, potentially wanting to buy it. And what that will do is it'll make the 10-year a little bit more appealing, the two-year a little bit less appealing, unless you're going for that interest rate. But what it really means is people expect more risk up front, meaning it's a recession indicator. People think the outlook is better 10 years from now than they do 2 years from now. So they think we're going to go through a recession. Very simple there. Overall, cryptos have done pretty well. They got a bid just like gold did. And we'll get into gold here in a minute. But looking at the cryptocurrencies, Bitcoin's up 828 points at the time of this reporting to 64,374. And this time last week, it was in the high 50s. So it's gone up about $6,000 in about a week's period of time. specifically a lot over the weekend. We know what happened there. Looking at some of the other ones, Ethereum, Ether is at 34.52, Ethereum Classic 23.63, Litecoin 73.09. All of these are up, by the way. XRP is 59 cents. It's gone up a lot. It was hovering that 42 to 48. Now it's up at 59 cents, up 5 cents on the day. We've finally seen XRP make some sort of move. Cardano is at 45 cents, up a penny. Polygon 54 cents, up a penny. Solana 159.33, up 369. So all of the cryptocurrencies are doing very well. The Dow in particular is doing well in the markets. I'm trying to figure out why that is, because investors are looking at stocks in the Dow, but manufacturing is down or flatlined. What's exactly driving that Dow? I'm not sure what the story is, other than it's just pure speculation. I don't know what else to say about that. All right. That's it for the economic data. We will get over to gold here in a second, but I'm going to talk about the story everybody's been talking about, and that is the assassination attempt of former president and running president Donald Trump over the weekend. I just wanted to, I'm going to try to do the best job as I can of being fact-based on this. I know there's tons of conspiracy theories, and I won't say whether I agree or don't agree with any of those, but we will talk about it. I'm going to show you a video here in a minute, which lends to the theory that perhaps everything wasn't done that could have been to protect the candidate, Donald Trump, former president. Here's a timeline of assassination attempts in case anybody, if you forgot your history class or you haven't gotten there yet. There have been assassination attempts and assassinations in history. Of course, you had Abraham Lincoln was assassinated in 1865. Then you had James Garfield. Then you had William McKinley. Note that back in the day, when the Union was just really sort of forming and getting going, we had a lot more violence in the political sphere, physical violence. We also had a lot of violence at the polls and things like that. We've been living in an era which have been relatively violent-free. If you're talking about since from Kennedy to now, you did have the attempted assassination of Ronald Reagan, which is here, but it's been quiet, relatively speaking. I guess it was kind of busy, 1865 to 81. Then you had a couple of things in the early 1900s. Then it was quiet to 63, and then we've had a couple. But it's not like we've had a ton of it. And I think earlier in our union, it was maybe more acceptable, given the times, for that kind of violence to occur. We become, for the most part, a non-violent society when compared with the past. So it's even more of an impact when something like this happens, especially a president. In any case, I wanted to give you a little bit of history on that. Here's the video I was referring to with regards to people pointing out that there was a shooter on the roof and trying to tell authorities way before he ever took his shots. And there's other videos. I'm showing this one. There are other ones showing different angles of what happened in timelines and why didn't the Secret Service, who had a beat on this guy, there's two guys on a roof, Secret Service pointed toward the roof this guy was on, and never took a shot. And we've had a lot of third-party videos come out, and people who have been snipers or been in the military or been a part of security, and saying there's no way that could have happened. They should have had somebody on every roof, and that was bad. Best case scenario, this is just a failure of Secret Service. Worst case, somebody in one of these positions of powers wanted this to happen, or at least enabled it to happen. I don't know. I'm not going to make a definitive statement on there, but it looks real sketchy. And so I'm just going to show you this video. This is one video that emerged regarding what happened and how people were pointing out, there's a guy on the roof, there's a guy on the roof, and nothing happened. And this was quite a bit of time, enough time for something to have been done before the shots rang out, attempting to assassinate Donald Trump. Here we go.
Look, they're all pointing. Yeah, someone's on top of the roof.
Oh, wait, we're probably not going to get the sound that way, so let me put my mic up here, and I'm going to run this again. I realized I don't have it in a standalone video. Here we go. So Trump is still speaking.
Look, they're all pointing. Yeah, someone's on top of the roof.
There's an officer.
Look. There he is right there.
And there's a guy on the roof.
Right there, see him?
Army
He's
crawling.
laying down, see him?
Yeah, he's laying down.
What's happening? Yeah, look, there he is.
Because we have millions and millions of people in our country that shouldn't be here. Dangerous people, criminals. We have criminals. We have drug dealers. We have people that should not be here.
Right on the roof.
It's much tougher than it happens.
You went right on the roof, big guy.
He was doing.
Okay, it's, look, there was an officer you saw at the beginning of that video. It was standing right on the edge of the building, seemingly looking at the guy. You had people pointing it out, and this is way before anything happened. And why the hell is he on a roof 150 feet or whatever it was from the president in the first place? That's just the worst security ever. And why didn't something happen? If one of the local enforcement, if people are pointing this out, local enforcement sees it, are they not radioing in saying, hey, we got a threat, take care of it? I understand them, I don't know what protocol is. Would they shoot him right off the bat? Would they just try to pull him off the roof? I don't know. But obviously something was very screwed up there. And it just looks like it's bad all the way around. This is going to feed conspiracy theories about how this was done on purpose and such was involved and Secret Service was involved. We don't know until the investigation comes out. But at the best case scenario is that the Secret Service flat out failed a former president, didn't protect, did a really horrible job to call them out. Local law enforcement probably should have done more. And that's a situation that could have been avoided. And what could have happened is that you ended up having, I'll call it a political civil war. I don't know if we'd had a shooting war if he had been assassinated or nearly killed, but you would have had us divided along political lines, and it wouldn't have been good for the country. And that kind of stuff is just extremely irresponsible. Who's ever ends up being responsible for that failure of security there needs to be serious repercussions, because the effect of somebody assassinating a running candidate for president, somebody's been president before, especially someone like Donald, who's been his presidency and even after has been so controversial. That can't happen. That's a mess, and somebody needs to be held accountable, and there needs to be an investigation as to whether the Secret Service should even be the ones guarding these candidates and the presidents and all the other people that may be guarding, like ambassadors and other political figures. Maybe it's time we re-examine whether Secret Service should be doing there, or at least examine their protocols and who's ultimately calling those shots and how that goes down. That doesn't look good from any angle, and it's going to feed nothing but conspiracy theories, and maybe rightfully so. That's a mess. There are plenty of other videos out there, eyewitness reports. There was a guy that was on the other side of the building that spent about 3 or 4 minutes talking to a local reporter about how he saw it, and he was notifying cops on the other side of the building 3 to 4 minutes beforehand. They would have had plenty of time, and apparently, nobody acted. And of course, there was a ladder left there, and you would think that authorities would canvass the area, block off all ways of getting on the buildings. If there's a ladder there, take it down, station people, put people on roofs, all that kind of stuff. That kind of thing never should have happened. It's not like it was a super dense area where somebody could get in an office building and it's really hard to canvass every floor of every office building. This is out in a field with 3 or 4 buildings. This should have been easy. Yeah, that was a mess. That's all I'm going to say on that. Don't want to get banned off of this channel, so we'll just leave it at that. You guys can make your own conclusion as to what's going on. All right, on to the gold and silver report. We're going to jump over CME Group, and I do these very simply now because we already know what happened. If you guys watch the channel, you know what happens. So I'm just reading you the tape, and if this is the first time you're seeing it, throw up a question in the chat, or throw up a question in the comments and I'll answer. It's not too hard to figure out. It's a really busy website. I'm sorry, this is silver. Let's go to gold first. This is gold, looking at volume and open interest. All we do here is we see the overall flow of the trades, which ones have been closed, how the trades are settling, and then we look at how the prices are settling. It gives us an idea of where the gold price comes from, because again, it comes from the derivative market, the paper market, not the physical. You guys know that comments for the new people on the channel. Looking at the top line numbers here, this little section right here, 235,000 contract volume on gold, which is a fair amount. You can see that the dominant month right now is August. There's 266,000 open interest contracts, but that's very quickly rolling over to December, which is second, 227,988. So by the end of this month, most of the trade's going to be in December. And remember, this is a futures market. And as of yesterday, we had an additional 10,000 contracts added to December. So everybody's rolling and moving to December. But in any case, a lot of the activity is still in August. So you're going to see a split. You're going to see some of the activity occurring in August, some in December, and then most of it's going to rotate over to October and December, with a vast majority in December here in the next couple of weeks as July ends. 235 open volume. I want to point out the EFPs, or as exchange for physical. It's when you take a COMEX futures contract, you go over to the UK and you say, I want to get on that unallocated or partially allocated over the counter market, and I want to exchange for the physical. That's what EFP is called. Sometimes you do price differentials. Part of the reason people are just switching contracts from COMEX to the UK is the UK has better prices on gold and silver. The COMEX, as far as world exchanges goes, tends to be the cheapest in terms of pricing. And so a lot of times people will just buy a contract over here and try to go over there. And even if they make a little money on it, they'll take it, or maybe they're hunting for the physical at a cheaper price. Think about it. If you can buy a contract here at a cheaper price and go get the physical over there, you're making money. Or if you just trade in the one type of paper for another, and then you sell your position in London to somebody else who wants it, you make a little bit of money, mailbox money, paper money. So that's why the EFPs have been elevated for a long time. The suppression is, and the short interest is much larger on COMEX than anywhere else. This is the indication, EFPs. The other thing I like to point out is we had a few deliveries. It's not a big delivery month because you deliver in the current month. There's not a lot of contracts. But what really has popped out are these block trades, the trade after settlements, and the clear ports. Those three are different ways to do an off-market transaction and bring it to the market. A block trade is where you do it in a block. You do a big block of contracts, buyer, seller, one-to-one, and then you say, we're going to agree on this, and you throw it on there. Trade after settlement is an order type that specifies a day settlement price. So you take whatever that day's settlement price is, you make the deal, and you're not competing against a rapidly fluctuating market. You're just like, okay, yesterday it closed at 24, 27, and 18 cents, whatever. I want to trade at that price. I don't want to trade to open the market when it's up and down. Why do they do trade after settlements? Because you can trade overnight at a time in which the price is stable, and you don't have to put your trade in when the price is moving up and down. It's a sign of people avoiding the risk of volatility in the market. Why the volatility is going up? What did I say about 2024? More volatility in the markets, especially gold and silver. That's why these trades have boosted up. That was a correct call by me last year when I said that would happen. The clear port, basically, if you go down here, it's an acronym for privately negotiated trades, which may be reported through Clearport, CME Group's clearing service for over-the-counter markets, or directly into CME clearing. Sorry, guys, I have allergies really bad, so I'm going to try to get through this without coughing too much or losing my voice. But Clearport is basically you're doing a private transaction. You agree to it ahead of time. You bring it on the exchange. Why is that? Again, they don't want to deal with the volatility of the market. So all of these things, these didn't used to be as popular. You can see they're popular in almost every month now. You're seeing these alternative trades in every month because people don't want to go into the market dealing with that volatility. That's a sign that the markets are more volatile. What did I say last year would happen? The markets would be more volatile. We've definitely seen that in gold and silver this year. Settlement, sorry. Settlements where you get the prices. You're looking at Monday's data. It was up $8.20 in August, and December, $8.30. You go to Friday's data, it was down $1. It's just pricing. This is where prices determine. It's the only reason I show it. On to silver, lower volume. You're probably going to have a little bit less shorting, but some shorting. I'll show you that in the COT report in a minute. Usually when you have these big bars, it's massive shorting. In this case, it's a little bit less shorting. We'll show you that in the chart. 63,000 contracts, most of it in September, but it's starting to roll to December as well. EFPs 1578. That's the largest number I've seen in silver in quite some time, maybe this year, because that's 5,000 ounces. On gold, when you see EFPs, you see an EFP number of, let me get back to volume and OI. In gold, if you see an EFP number of 2225 like we do here, that's times 100 ounces gold. Each contract's 100 ounces. When you're in silver and you see 1578, you're like, well, that's less, but it's 5,000 ounces. So that's a lot of silver that somebody's trying to go over to London and grab a hold of, or at least get better pricing on. Because again, the suppression is largest on the COMEX, always has been. But it's becoming more and more apparent the last couple of years as EFPs have ticked up. Well, guess what else ticked up? Clearport, we talked about, block trades and trades after settlement. Why? People don't want the volatility of the market. It's a sign that they don't trust the market. They don't trust the players in the market. They don't trust that they'll get, equitable settlement for their price targets. They don't trust that the market's not going to trade against them. So they're taking these off live market transactions and putting them on the market, settled privately, so they don't have to deal with that mess. That's a sign that the participants don't trust the market. They don't trust the market. Let me say that again. That's a sign that the participants in the market don't trust the market. Well, who would they not trust? I don't know. Who has the largest concentrated positions of silver and gold? Would be the bullion banks. Maybe it's the bullion banks. They have the largest single position. If you're not trusting the market, you're probably not trusting the people that are market makers and can move it the most. Who is that? It will be the bullion banks. They don't trust the bullion banks the way they're playing in the market. That's what that means. All right, on settlements for silver. As of yesterday, down 21 cents. As of Friday, down 50 cents. That's how it's determined. That's all you need to know. You can go see it anytime you want. On to the COT report, this commitment of traders from the regular, the CFTC. It comes out about a week and a half behind. This is through July 9th. And I always look at swap dealers first. Those are the ones that are more speculative. It tells you what they're doing and how they expect the market to go. They often put in a trade and lead the direction of the trade. And also they do a lot of shorting. So when they short, you see that price come down. I'll show you that in a minute when we get to the pricing. They shorted silver to the tune of 1,451 additional contracts, and they dropped 600 of their longs, which means they went net longer about 2,000 short contracts than they were the day previous or the week previous. And you can see that they're almost 70,000 contracts short versus 25. They're getting to the point of almost being 3-to-1 short. They're really trying to hold that price of silver down, almost 3-to-1 short. A few months ago, they were dead ass even at about 36,000 contracts each. Now it's almost 70 short and 25 long, and they keep pushing that position over the summer. Part of this take advantage of seasonality, which hasn't been as big of a player. So you have to look at the fact that seasonality hasn't been as big of a player this summer because of the news of the assassination and bad economic data as typically we get in the summer. And you have to say, well, they're not doing it for seasonality because seasonality hasn't shown up yet. Still could in the next 2 months, you know, from the middle to the end of summer, but it hasn't shown up yet. So you have to think now that their motivation is to keep that market short. Maybe they feel like it should go short and it's not, and they're panicking, or maybe they're trying to keep it short and they don't want the price to rise. Could be one and both at the same time. We don't know. The other side of the trade, the managed money, the financial houses, they dumped 5,600 contracts long. They're going big time long. The financial houses, gosh, why can I not think right now? The funds are going long. All the funds are going long, thinking that silver is going to go up. Probably because of what they're seeing in the market. Down to gold. This is gold. Same time frame. Gold, they really went crazy. The swap dealers added an additional 10,442 shorts, but they also added 2,258 long. So the net position change is about 8,200. Still, though, they're at 290 short to 62 long. And who are the biggest short position traders? Well, it's 1.9% for 8 traders, and we know Office of the Comptroller of the Currency Report, it's 4 big banks and then some smaller banks and others that make up the other 4. So it's really the bullion banks that are doing the big concentrated short positions, and they keep going more and more short. And gold and silver still are range trading, but it's these shorts they had to put in to keep it within the range. In other words, if the bullion banks hadn't thrown this much short paper on both gold and silver this summer, we would have much higher gold and silver prices, which would be a counter trend, because usually in the summer it weakens. And so if anything, it looks like gold and silver are going to stay strong for a while. Now, how long? Oh, I want to show you real quick. This is through July 9th on both gold and silver. It's a week old, so let's look at the pricing charts. Here's the 9th. Here's the downward movement until they release the shorts and it goes back up. Here's the downward movement until they release the shorts and it goes back up. When the banks put concentrated short positions on, it moves the price. And then when they release it, it goes up. They're the biggest controller of the short position. You can see it in the data. I mean, it's not speculative. It's not, you know, a theory. You can see it in the data. We know who's shorting it. Given what's going on geopolitically, but more at home with the assassination and what's been going on, I may have to back off my position on saying gold and silver are going to go a little bit more short this summer, like they typically do. The seasonality, I think, is still in play, but the seasonality may not be as strong this summer. Now, we still got about 2 months left, because seasonality in gold and silver really kicks off between about now and mid-September when you get to the end of summer. It's usually not until second, third week of September when the traders come back in. You start to see that rise. You start to see that love trade in the Asian countries where they buy a lot of gold and silver for ceremonies, and start to see more buoyancy in gold and silver because people are coming back from summer and, you know, making their investments for the year. You also see a lot more happen politically and geopolitically, which tends to drive up the prices a little bit. And usually summer is slow, but I'm not seeing the doldrums right now in gold and silver, and I think it's news. Now, to be fair, I did say they wouldn't weaken in price if we had a black swan, like a bank failure or a war. I wasn't thinking assassination attempt. Is that a black swan? No. And I don't. Gold and silver didn't pop because of assassination attempt. They just kind of stayed. You know, they've only gone up a few bucks, relatively speaking. Not even 1% each, really. Maybe 1% in silver, not in gold. But not much. Relatively speaking, it hasn't been a big pop. Not, I mean, if you saw bank failures, gold and silver would run. Gold might be at 2,600 and silver might be at 50. The assassination attempt's not going to pop gold and silver, but it's given it a little buoyancy. I don't know how long that will last. It depends on if something happens. If something comes out to where it's a conspiracy, or something else happens with the banks or whatever, then, you know, like I said, all bets are off. You can see gold and silver rise. I'm just surprised gold and silver is rising right now. It just surprises me that, that's what's happening, and we have such buoyancy in those prices. It's not something that I really, would have expected, but we'll continue to follow it. We got 2 more months. Usually the worst part of the fade's the back half of summer. So we'll see if gold holds around 2,400 and silver stays above 30, and we'll keep following that. I do think we're in a period. I want to end it with this. Remember when I brought you the research about 3 years ago, and have talked about it 6 or 7 times since then, the research around Sir John Glubb, and also around conjugative cycles, the fourth turning, if you will, and how everything goes in cycles. And I related it to the nation state. What we're going through now in America is not unlike what other politically or economically and culturally is not unlike what other civilizations have gone through when they reach about the 250-year mark, which we're sitting right on top of since the Declaration of Independence, since we announced we're free and independent. Once that clock starts ticking, you got 250 years before you start having, big issues, these big, powerful nation states. So this has happened. Things like this have happened economically, culturally, politically, in every major civilization that was the leading civilization of its time for the last almost 3,000 years, according to the research that we have. Well, so when that, stuff's going to happen. So what you want to do is just understand we're going through the same phase that other civilizations have gone through. Don't let it all surprise you. Educate yourself on that. I'll bring it back on the program again. I'll talk about cyclicality again. There's cyclicality in investing. There's cyclicality in culture and politics and in human relations and in nation states. There's cyclicality in geopolitics and trade. I mean, that's just part of it. So not saying this is normal and we should accept it, but just understand that this has always been the case, and don't let it, kick you in the chest. Don't let the horse kick you in the chest. Just understand this is going to occur and just protect yourself. Be fiscally conservative. Be careful who your friends are. Don't go, I would say be careful going to concerts and ball games and rallies, because you never know what's going to happen. I'm not saying anything bad can happen, but we're in the era where you have to practice better OPSEC, operational security. That's something I learned in my master's. I did a lot in security over the years. That's why I wanted to comment on the assassination attempt, because it just looks like crap security. I mean, I've audited physical and online security before, and that just stinks to high heaven. But you have to understand that stuff like this is going to happen when nation states get aged and things start to break down. Things get very contentious and people get angry and stuff happens. So just know and understand that, and prepare yourself and keep yourself safe. And by the way, don't necessarily listen to every conspiracy theory out there. I listened to a bunch of them. Conspiracy theories aren't bad, by the way, because they allow us to explore potential truths. But just be careful you buy into anyone. Let the data and the facts come out and make your decisions on that. But just understand that this kind of stuff is going to happen. And that while we don't necessarily have to accept it on its face, that we shouldn't be upset about it. Just understand that we're in that period in our nation's history in which this stuff is going to occur, and understand it. And just protect yourself financially and otherwise. Protect yourself. It's just going to be one of those things. And, pay attention to this channel, because I'll tell you that kind of stuff. I'm not necessarily going to espouse every conspiracy theory, but I'll tell you years ahead of time that it's going to get rocky. And I did 3 years ago. And then I did say last year, it's going to get rocky this year. So if you're paying attention to what we're talking about on the channel, you got time to prepare. I'll tell you ahead of time. I've been doing that. And that's, I think, why you come here. But we try to do it in a way that's full of integrity and doesn't go too far out on the speculative limb, because at the end of the day, we could do that all day long. But you're just going to drive yourself crazy with it. Just understand this is the pattern. Understand it's happening. Try to understand as much as you can about it. But the main thing is just to protect yourself and your family. That's the main thing, because you're not going to control it. You cannot control who gets elected to the White House. Your one vote's not going to control that. You're not going to control assassinations. You're not going to control the economy. What you can control is your own sphere of influence, yourself, and you can control your reaction to these things. Don't let all of this stuff drive you nuts and drive you crazy. That's probably part of the intent, is to split, divide, and drive you into a frenzy. Don't allow it to do that, because you're losing if you do. Keep your head in these times. Keep your head. That's the most important thing. Real quick, to an affiliation, not a sponsor, is Kinesis. I'm wearing it on my shirt, although I'm not doing a good job of putting it on screen. Kinesis, there's a link down below if you want to join. It's a referral link. It does help the channel, does help us. If you're interested, Kinesis is the first fully formed in history gold and silver backed digital token. It's not a coin like a Bitcoin. It's a token backed 1-to-1 for gold and silver that you can transact in. And they got some big announcements coming in Q3 and Q4 as far as their posture and stance in the United States. And they're going to enhance it to where it's going to become more and more appealing. So for right now, maybe a time that you want to, and it's Kinesis.money, you may want to investigate that. Now, in all transparency, yes, it does help. I get like a little tiny bit of, if you fund your account and use it, I get a little bit, tiny bit of that in terms of like referral fees and things. It's not a ton. I don't get anything if you don't do it. So it's not going to hurt you. And I'm not trying to push them on you. I'm just saying, if you're looking for a safe place for your money in this crazy world, gold and silver is a way to do it. But if you're putting it all under your mattress, you've got two problems there. You got the home invasion risk, plus you're not circulating as money. All the people that take gold and silver and stick it somewhere and never use it are just guaranteeing it can never be money, which means it can't push out the bad currency. To push out the bad currency, we got to circulate it. Kinesis, as the name implies, kinesis is kinetic energy, or the ability to move. Think about your PE classes or your sports. That's part of kinesiology, the ability to move and exercise. And, you know, business has to move forward. Money has to move to be money. Gold and silver without movement are not money. When they move, they're just stores of value. When they move, they're money. So if you want gold and silver as money, you got to move it. Kinesis is one way to do that using the blockchain, backed 1-to-1 gold and silver. If you're interested, check out the link below. I like the company. I've always liked the company. But transparency, yes, we do get something if you sign up and fund your account. But I think that they're a really solid option, the best of the ones that are doing this. And just as a proof point to that, go look at their Indonesia project. Indonesia is the 5th largest country in the world by population, 270 some million people, many different subcultures there. Kinesis built the platform, which allows payments through the postal system. And I believe you can pay not only for postal services, but other things like utility bills. And it's working. And it's proof for the 5th biggest country in the world that the system works. So not only that, they just came out with a recent audit. The audit passed flying colors. We know the metal's there. We know everything's there. Everything's on the up and up. And then we continue to just drive that innovation. They're working with other countries around the world, which are not announcing yet. They're also going to be bringing some really key features to the United States here in Q3 and Q4 that I think you guys will be interested in. And that's all I'm going to say on that. I don't want to do too big of an advertisement, but check them out. If you're interested in something that will allow you to actually spend your gold and silver, you do not pay for storage there. It's paid through transaction fees. You actually get a holder's yield if you hold it there. And if you spend it, you get a yield, and that's paid through fees. And it's only a percentage of fees. It's not a guaranteed amount. It's a guaranteed percentage, but not a guaranteed amount, meaning if everybody stops and nobody uses it, you're not going to get a payment. That's how it's not a Ponzi. But people have been using it, and the fee pools have been going up, and people are very happy with that. So check it out. I'll do more on them later. Want to do a Q&A series with their management. I'm trying to get that on the channel so that you guys can ask questions and we can answer them going forward. All right, enough on that. Thanks, guys, for tuning in. Remember, don't lose your head. Know that in the cyclicality of nations and economies, this kind of stuff occurs. It doesn't excuse the behavior, but you know it's going to happen. Protect yourself. Be conservative in your approach. I'm not talking about politics. I'm saying be conservative in your approach. Protect yourself and your family. Realize you don't control all of this, and don't allow yourself to lose your head and, you know, go crazy worrying about the stuff that you don't control. Just understand some of it's going to happen. Be aware of the circumstances around it. Be aware of all the conspiracies, but really focus on what you know and inform yourself as much as possible. And we'll continue to do as much for you on this channel. Thanks, guys, for joining. This has been the weekly market report for July 16, 2024 on the Freedom Report channel. I'm your host, Rob Kientz. Until next time.